Why don't we talk about the kind of the maths behind, or the math behind a fund? So you mentioned about the risk tolerance, the long time horizons that venture capitals are more attuned for. They've got the expertise, the skills to get in early, particularly if they're interested in deep tech. But I imagine that you're looking for the unicorn amongst the horses, right? Like there's going to be maybe out of 10, not all of them are going to succeed, and that's kind of built into the maths, right?
That's it. And maybe we've focused on negative just in the previous conversation. Let's focus on the positive. The positive is that 1 out of 10 companies we invest into is just going to make it really big,
Yep.
and it's our job to find them. But it is a bit of a looking for a needle in a haystack type of exercise. We need to narrow that haystack down to maybe a small bundle, a small amount of hay, and then we need to invest into them, find who's successful, and then back them even further. So the general sort of numbers, depending on when you invest, is maybe 3 out of 10 will generate a nice return, but out of those 3, 1 of them will be
Right.
a large return. And maybe sort of 1 in 20 will be multi-billion dollars, and it's our job to find it, and when we find it, to really double down.
Yeah. Oh, that's incredible. Of course, it needs to be worth it, right? But you've built in. So you kind of mentioned 3 are going to be successful. 1 is going to be uber successful. Maybe 1 in 20 is going to be ultra successful. What's the time horizon we're talking for this? Because it's not a couple of years, is it?
No. Most venture capital funds are 10-year closed-ended funds. So generally, they're looking for 5-year returns in 5 years. And at the start of your fund, you can take a slightly longer horizon. Towards the end of the deployment of your fund, you have to take a shorter horizon.
Yep.
The reality is, medical takes a long time. We all know that, and so you've really got to be careful about how you balance the portfolio. You can't have all your companies be really risky and take 10 years, but you might accept one of them that's out of your portfolio to take that full 10-year horizon.
Right. Okay. So like the different tranches of risk and time horizon for those companies.
Yeah.
Yeah. That's very cool. Now, where was I going to go with that? It was a follow-on. When you're establishing a fund, so it's not the venture capital firm's money per se, right? So you're bringing in outside funds from investors that have additional capital to deploy, right?
Mm-hmm. Yeah. I was actually talking to a founder just yesterday, and it came up. It occurred to them. I said, "Wait a second. You guys need a pitch to investors just like we do." And the answer is yes. And so we actually live in the same world as our portfolio companies. We're constantly evaluated by our investors. We need to raise money. We need to show returns.
Yeah.
And I think that's actually we have to be really disciplined about how we invest, because it is other people's money. But it also puts us in the same equal playing field as our portfolio companies. Their victories are our victories. Their pain is our pain, and that's really important to have that alignment.
Yeah, true. I didn't think about that like that. Which direction is the relationship going? I mean, do you have to find the companies first and then pitch a fund, or do you pitch a fund based on previous experience, knowing that you have 50 companies out of which you'll select 20?
Yeah, so it's really hard to start at the first fund is the first thing. So you can't just sort of get out of bed one morning having not been in venture capital and say, I'm going to start a fund. Most people have got a lot of experience, and generally you've made a few investments, maybe as an angel, but hopefully in another organization. And yes, you've got sort of relationships with deal flow. You've got a few deals that you think that they're on. You've got actually a fund thesis. So just like a company will have a vision, for a fund, you've actually have a thesis, investment strategy. And you've got a few companies you've selected that are consistent with that strategy, and that's what you take to investors in the fund. And then as you have multiple funds, then you're selling that plus also your track record.
Yeah.
And hopefully your track record is a positive.
But it would take a while to build up that track record, wouldn't it? I mean, you've got to be so patient.
You do. So it's very hard for, I think, it's equally as hard for second-time fund managers, because they've got a fund but they have got no performance to show. Yeah, we're lucky in that our first fund we did that actually as an open-ended fund over a 10-year period, and so when we were raising our second fund, we had exits to point to.
Okay, yeah, and that's what everyone's really gunning for, right? That's when you get the return.
Yeah, and exits doesn't mean that we sell the company to someone else, and sometimes it means we sell our shareholding to other investors that want to come in and take a company to the next stage. Our experience is to take a company to a certain stage, and when the next round of investor wants to come in, they might want to have a bigger piece of the pie. They might want to put more capital in and take it on, and that's okay.
Mm. So I suppose the steps are raising the capital, finding ventures to put money in, scaling those ventures, and then eventually, what we just, like you just said, is the big exit, or handing over the reins to someone else.
Yeah. And I think everyone focuses on venture capital as sort of the big thing is selecting the investments. That's really where the journey starts. The bigger thing is guiding those companies, and in deep tech, because it's so complicated. You've been through pharmaceutical development yourself. There's so many tricks of the trade, insights that you need to know, and the more people you get around the table, the better robust decision making you have. And because founders, not necessarily are repeat founders, or second time founders, they haven't been through that. So it's really our job to help guide that. Yeah. We do have, we have one company where it's a third time founder, and they've been successful twice before. But it still doesn't mean that they don't want our advice. In fact, they love it because they need someone to bounce the ideas off who actually has skin in the game almost as much as them.
Yes.